Hey everyone, I know some of you passive income investors are looking at 3M stock and its dividend yield of 6.1%, and it's getting really interesting. But you're asking yourself, how sustainable is this dividend? Because not only are you interested in a high dividend yield, you're also interested in a sustainable dividend yield in a stock that will pay you dividends for the next 5, 10, maybe 20 years you're looking at. So when you're seeing a dividend yield like this, sometimes it can be a dividend trap. So in this video, I'm going to go through some of 3M's characteristics, its financial metrics, to answer how sustainable this dividend yield is. So let's get right into it. Starting with the company's earnings per share as related to its dividend per share. Now, I always look at this metric to start my analysis because it tells me if the company is spending more on dividends than it's bringing in earnings, and right away that would be a red flag. And for the most part of the last decade, 3M was generating sufficient earnings to support its dividend payment. You could see the dividend payment in the orange line here and the earnings per share in the purple. But in the last year or so, its earnings have turned negative, significantly negative, and this is a result to write-downs the company has to take in relation to settlements for lawsuits, billions of dollars in settlements for lawsuits. Now, these are most likely one-time items that the company, once they get through this near term, they have a few legal issues they need to settle. Once they get through these, longer term, these are not likely to occur, at least not in this magnitude. Corporations often get sued and there's often legal disputes, but the magnitude of the legal disputes that 3M faces is massive right now. And so those billion-dollar settlements are eating into the company's earnings, and that's why they turn negative. So the next thing I wanted to look at is the company's debt and its cash, because sometimes, when your earnings fall below what your typical monthly spend is, you can support spending and keeping your lifestyle the same by borrowing a little bit on a credit card or maybe dipping into your savings just so you can sustain that lifestyle and not disrupt your lifestyle too much. Well, businesses sometimes do the same thing. When earnings fall, they sometimes support their dividend payments with a little bit of borrowing or dipping into its savings a little bit. And so I wanted to see if 3M has that flexibility looking at its balance sheet, and it's got about 16 billion in debt and about 4 billion in cash, which is not that large a sum in relation to the company's revenue, its profits, and its cash flow. So I would say if it is necessary or if it becomes necessary, the company can dip into savings or borrowing in order to support the dividend if it needs to. Although what I'm going to look at next, we will notice that perhaps they won't need to, because I'm talking about its cash flow from operations. So 3M for the better part of the last decade has averaged just a little over $6.5 billion in cash flow from operations. Now, even with this big dip in the recent year and a half or so, it's still, above 6.2 billion in the most recent trailing 12-month period. So while I mentioned those legal disputes and the settlements turned the company's earnings per share negative, they haven't turned the company's cash flow from operations negative. Now, why is that the case? Well, typically, or I shouldn't say typically, but sometimes when a company makes a settlement for billions of dollars to settle some claim, that settlement doesn't have to be paid right away. So they might make the settlement right now today, but the agreement might call for, let's, for example, say the settlement was for $10 billion. But the agreement for 10 billion might be that the company pays 500 million per year for 20 years. So the headline number might be massive, $10 billion, but it might only be 500 million per year for 20 years. And what that allows the company to do is take that $10 billion write down immediately and get the tax benefit immediately, and then make the payout, the cash payout, over the next 20 years. It's a favorable scenario for the company, and it also allows the settlements to headline a massive number so that they can show that they won a massive agreement. And so it works in both sides' favor. And I've seen that quite often with companies and settlements, in that the headline number is massive, but when you look at the details, it might be a smaller payment over a longer period of time. And that looks like what's happening with 3M here. And so if I was to answer how safe or how sustainable is 3M's dividend, I would say as long as these legal disputes remain in the ranges that we've heard for right now, the estimates that have came out so far, as long as they stay in that range, then 3M's dividend is relatively safe. However, if we start to see that the initial estimates were way too low and the actual number is going to be billions and billions higher, then that dividend might be at risk. So the big factor in determining the sustainability of 3M's dividend is the current situation with the legal disputes. If it can weather this storm, if it can get through these claims and get through with the estimates that have been suggested, then it's a relatively safe dividend.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.